Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 23rd, 2025, and we're diving into the latest earnings report from ePlus, a leading provider of technology and financing solutions. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ePlus has just released their fourth quarter and full fiscal year 2025 results, and there's a lot to unpack, from their impressive EPS growth to strategic shifts in their business model.
Revenue and profitability overview. Let's start with the top line. ePlus reported a net sales decrease of 10.2% to $498 million for the fourth quarter. However, their gross profit increased by 11.8% to $145.8 million. John, how did they manage to improve profitability despite the drop in sales?
That's a great question. The key here is their focus on higher margin services and subscription models, which have significantly boosted their gross margin to 29.3% from 23.5% last year. This strategic shift has allowed them to increase net earnings by 14.6% to $25.2 million, showcasing their ability to adapt and thrive in a changing market.
EPS performance and analyst expectations. ePlus has reported a diluted EPS of 95 cents, with a non-GAAP EPS of $1.01, which is a significant increase from last year. This is well above the analyst forecast of 68 cents. What does this tell us about the company's performance?
This is a clear indication that ePlus is outperforming market expectations. The 19.4% increase in non-GAAP EPS reflects their strong operational execution and cost management. Beating the analyst forecast by such a margin highlights their robust financial health and strategic positioning in the market.
Strategic initiatives and market positioning. ePlus has been focusing on expanding its service revenue, which increased by 33% this quarter. They've also made strategic acquisitions, like Bailiwick Services. How are these initiatives shaping their market positioning?
ePlus is strategically positioning itself in high-growth areas such as AI, cloud, and security. The acquisition of Bailiwick Services has bolstered their service offerings, contributing to a significant gross margin expansion. This focus on services and strategic acquisitions is enhancing their competitive edge and long-term profitability.
Future outlook and guidance. Looking ahead, ePlus has provided guidance for fiscal year 2026, expecting low single-digit sales growth and mid-single-digit growth in gross profit and EBITDA. How does this outlook align with their current strategy?
The guidance reflects a cautious optimism considering economic uncertainties. ePlus is focusing on high-demand sectors like AI, cloud, and security, which are expected to drive growth. Their strategic initiatives and market positioning should support these growth targets, even amidst potential economic challenges.
Key takeaways. In summary, ePlus has delivered a strong performance this quarter, significantly beating EPS expectations and showing robust growth in service revenues. Their strategic focus on high-growth areas and successful acquisitions like Bailiwick Services are setting a positive trajectory for the future. Thank you for joining us, John.
Thank you. It's been a pleasure discussing ePlus's impressive results and future prospects.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analyses. We'd love to hear your thoughts on ePlus's performance in the comments below. Until next time.